So welcome to another market update. This is after the market closed, 10th of February 2023. As the market goes, so do your stocks. Your individual stock trades are merely boats on the ocean of the overall market indexes like the S&P 500. So it's important to know which way the tide and the current is going. Are we in a bull market? Are we in a bear market? And so on. So as I've been commentating on recently, and as I explained, the downtrend that's been torching everyone for over a year now finally broke and broke this, and then pushed upwards a week afterwards. So the big question this week was, what is the market going to do? Well, what we do here is filter out all the noise and nonsense. And while the talking heads were panicking, saying, oh, that's the worst week for the stock market this year, if you can read charts, you'll know that actually that was a very good week indeed, because what we had here was a healthy pullback. Actually, it was textbook perfect. So there's the line, that's called a line of resistance here, and it's a classic double bottom, even a triple bottom here, and it broke up above that. That's what broke the downtrend, this one here. And then this one broke another resistance line here. And it's very, very classic that it would pull back like that. See that down? That's what happened last week. And notice how it pulled back right to the resistance line. Really textbook stuff. So now, as long as it holds above that line there at around, I can't see because I've drawn all over it. I'll show you 1 second. That line there at around 4090. If it can, it needs to hold that. In short, it needs to end the week no lower than 4090. Let's zoom into the daily chart. Zoom in for day-by-day action, and we see a similar thing here. Now, another thing I pointed out last week is what we have here is the 50-day moving average crossing the 200-day moving average up above it. That's called a golden cross, and that's a sign for higher prices ahead. But as I pointed out, also, what a lot of people miss about the golden cross is that in the immediate term, it's actually a recipe for lower prices, and that's exactly what the market did. Straight away, we had a down, then up, and then most of the week was down. That is really what we're seeing here. Actually, is just textbook stuff, and it's actually very bullish. Let's check in on a few other things to look at. The VIX. This is the amount of people who are shorting the market, and what's interesting about Friday's action, which is always telling, is that they dumped those short positions. No interest in having a short position over the weekend. That's another bullish sign. What's been going against the market, and it hasn't made any difference, is the moon cycle, which we look at. It's strange, but there it is. It absolutely works, and it's been working classically so far this year. So for one more week, the moon is kind of working against the market until we get to February 20th when we have a new moon. The Dow has been leading this thing all along, so it's perfectly entitled to have a rest, and that's where it stays. And same for the Nasdaq, which has been the most bearish of them all. That did just what the S&P did, had a classic pullback there, that's all. Let's look at the dollar. Dollar had a rebound this week, which is normal. There was market uncertainty, so that went up. But also, it's come down pretty hard here, so it was due to have some kind of rebound activity there. Very important if you're a forex trader to know what the dollar is doing. And right now, it's kind of anyone's guess. It was up very aggressively, down very aggressively, and it's kind of bouncing all over the place. Although it's below its important 40-week moving average, and what we're really seeing here is kind of like a dead cat bounce as it pulls back. This is a thing that's watching interest rates. This is what it's really all about with interest rates. Nobody's buying American bonds, or not as many as they should be, and so they have to raise interest rates to make bonds more attractive. That's what's really going on. It hasn't got much to do with inflation. And that line here, as I keep saying, about 106 needs to get breached, and unfortunately this last week it just turned away from that instead of going higher. So the Fed needs that to be able to ease off on interest rates. Copper, as I've been saying, is what's also been giving us a bullish picture. Copper is called Dr. Copper for a reason. It is used in all kind of processes in the economy. And instead of turning down as it normally would have done here, kept on going right up higher. But copper itself also had a pullback. It's been a pullback kind of week around it, and that's a healthy thing. Nothing goes up and down in straight lines. Gold, as I also mentioned,